We talked about it. What is impairment and all that aspect is what discussed here. Retirements and disposals, that also we discussed. No gain or loss will be recognized when an asset is exchanged for a similar asset. Yes. If the net book value of this asset is 200 and the net book value of this asset also 200, I am taking this and then giving this. No gain or loss. If an asset is exchanged for a different asset, any difference between the fair value of the asset exchange and its carrying amount should be recognized in the income statement as a gain or loss. Same like profit or loss on disposal. Disclosure. In your financial statement, the one important disclosure about property, plant and equipment is that note. A detailed note. I think I shown that note to you on that last class. Cost, accumulated depreciation, addition, revaluation, disposal and depreciation for the year. Any depreciation related to disposal, likewise. So, measurement basis, more than one basis has been used. Depreciation method, useful life for the depreciation rates, gross carrying amount of accumulated depreciation, and at the beginning and at the end. These all are reconciliation that is shown in your financial statement under the notes specific to property, plant and equipment. If you see your financial statement, please take that and then read those. Keep a copy with you. And time to time, before and after your meal, 2 times a day. So you will remember this. Continue reconciliation of the beginning, that addition, disposal, acquisition, revaluation, impairment loss, and so on. And not to forget, if you happen to have any assets in a different country, your subsidiary or something, then foreign currency translation might fall in place. Then IAS 21. Heard of this word? Under lien. Meaning, you have a land, you have taken a loan, pledging that land, and that title deed need to be given to the bank, and they will stamp it under lien. And there are some clever companies, they again go on mortgaging the same property and try to take another loan. Now that it is all integrated and connected, you can't do that, but in the past it has been a practice. Accounting policy for the estimated cost of restoring the site of items of property, plant and equipment, the amount of expenditure on account for property, plant and equipment in the course of construction. Commitments for acquisition of property, plant and equipment. If you have made a commitment. Now, there is another aspect is, let's say you have you are taking a land from government, Qatar government, to perform some extraction work. And agreement is you will use this land for 5 years. At the end of the fifth year, you need to return the land back to government. And then you have also made an agreement, you will restore the original condition of the land at the time of handing over. So, now when this is happening, now, I kept the duster now, here. Now when, and this is year 5. I'm taking the land here, but then I need to return the land here. And we making an agreement that at the end of the 5th year, I need to bring the asset to its original condition and then return. So, can you make that like like magic? No, right? You got to incur some expense. But this expense will take place at which year? Year 5. But we are in year 0. So, what we have to do? We have to do some estimate. And now, IAS 37 comes into play. You got to make a provision. You got to make a provision as to how much you may incur and at the end of the 5th year. So what you do is we need to have a double entry now. I will have a provision and I will have, now this amount that I will incur also will be part of my cost of the asset. I cannot write off to P&L. If you don't agree to restore this, will the government give you this land? No. And that cost also part of that land for you. So you debit to asset. You debit here and then credit here. Now the interesting story is, this provision happens when? Year 5. But now where are we? Year 0. Then again the mathematical practice of present value I need to bring in. So year 1, 2, 3, 4 and 5. So the provision is here. Let's say 200 million example. Now from here to here, let's say cost of capital 8%. What you need to do? I have to calculate the present value of 200 million at 8%. And that becomes the year 0 value. Let's say 122 million. So that is the double entry. I will credit 122 and then debit 122. Asset life gone, kalas. But end of the 5th year, how much you need to pay? Is it 122 or 200 you should pay?
100. Sorry.
You need to pay 200. It's only an accounting exercise we have done here. But actually the government will not accept, oh yes my friend, you have done discounting, so I'm happy with 122. No. They will ask 200. Now, once the 12 months finished, now we will be, where are we now? Year 1. If we assume this is year 0, how many years remaining? 4 years, right? Then what the standard tells you, go and again calculate the present value using, see, this is year 5, 8% at the year 0. Then the second year when you go, it becomes 4. And that you know the equation here, 1 over 1 plus r over 100 to the power n. So when you are in year 0, this will be 5. When you are in year 1, this becomes 4. Now when it will be 4, you think the number will be bigger than this or smaller than this? What?
Bigger.
It will be bigger. For example, suppose let's say 135. Then my pre-starting provision is 122. Double entry was I debit to asset and credit to provision. Then I need to close this at the end of the year balance. How much is the closing balance? 135. So now I have a difference here. First of all, mathematically, how much is the difference?
13.
13 is the difference. This 13 have a special name or special meaning. This is considered to be a finance cost. This is considered to be a finance cost, and the special term is unwinding of discount. Every year this will happen. Every year this will happen. So when you reach to year 5, what will happen to your closing balance? It will become 200, and that money you need to pay. Is that clear? So, see, IAS 16 is connected with every different standards. So, one of the backbone and basic and easy to understand and no more complication. As you move on to the other standard, you will understand, oh my goodness, IAS 16 is much better. Okay? So, date of revaluation, independent valuer was involved, nature of any indices, in the index numbers. That's again mathematical exercise. We don't need to worry about it. That the professional valuer will do that. Carrying amount of each class of asset, revalued property, plant and equipment as if they had been carried at cost. And that concludes IAS 16. In my next session, I will discuss IAS 20 and IAS 20. Actually, what has happened now, standard has mingled IFRS 15 with IAS 20. So let me think. Otherwise, I will discuss IAS 23, which is borrowing cost. Thank you so much.